I promise you, you try it, you implement it, rewatch the video, get a little bit more familiar with it, go back to your own charts, implement it. You're going to see this concept work over and over again. And once you see it, you're not going to be able to unsee it. Yo, what is going on, guys? Welcome back to the channel. If you are returning, thank you for taking the time to watch another one of my videos. And if you're new, stay tuned, because I promise you by the end of the video, you are going to get enough value, enough information that'll help you in your own trading that you at least hit me with a like, if not a subscribe. So what we're going to do here is I'm actually going to take the next 20 minutes to break down to you guys how trends actually continue in the market. We all know by now that you have a trend which starts off as a low to a higher high to a higher low to a higher high, and then continuations of that for however long before trends break down and then recontinue. And then if you flip the chart, you have the same bearish example where you have a high to a lower low to a lower high, and then so on and so forth to continuations until price breaks up, just to go down and do the same thing over again, similar to this pattern right here. Now, what I want to get across to you guys is what's actually happening in the intermediary structure of these points here that is allowing the trend to actually play out and continue moving up, right? Because we know in trading, we deal with multiple time frames, and multiple time frames at different situations are going to be doing different things. And we know at this point in time, this time frame currently is trending, right? We can all agree on that. There's no secret there. But that doesn't mean that lower time frames like the daily or the 4-hour are going to be always trending, because they are moving at a different frequency, or they are doing their own thing in their own story or in their own context that is going to allow for their story to eventually line up with the higher time frame story, which is the weekly in this example that is currently in a trend, to be able to continue that trend. So sorry if that was confusing, but basically in trading, we operate using different time frames, and higher time frames set the precedence for lower time frames, and we want to make sure those lower time frames match up with our higher time frames, and we want to make sure it starts to match up with our higher time frames in these areas here. So what I'm going to show you guys here is two simple concepts I use in my own trading that has helped me be able to catch when a move wants to continue and make a higher structure point in a bullish market or a lower structure point in a bearish market. So these two terms I'm going to coin right here, and I'm going to grab my pencil, and I'm going to simply draw a market like this that's been consolidating. And we are going to call this the roof. And on the bottom part, we're going to call it a floor. Now, you're probably wondering why I just drew a bunch of random sideways lines and then put a roof and a floor on the top side and the bottom side, because this is essentially a pattern that likes to create itself in points of a higher low, like such, or points of a lower high, like such. And I know what you're thinking. Well, this point that I drew here and this point you see right here looks nothing like this over here. And you're absolutely right. You're absolutely right, because we're viewing it through a different time frame. So on our higher time frame, the weekly here, all we see is an assortment or a decreasing price action shown in a couple bearish candlesticks, right? We don't get the full picture. So what we have to do in areas like this is we have to zoom down into, let's go into a daily time frame here. We have to zoom into a daily time frame, and what I'm actually going to do is I will draw little points right here. I'll do little circles. So that way, when I go down to that daily time frame, we know the exact areas we're looking at. And you'll notice how these areas now look different on the daily time frame than it does on the weekly time frame. And why it looks different goes back to what we were just showing you guys in this paint diagram here. It's because in these points where the lower lows, or sorry, the higher lows, or the lower highs are being formed, what price is going to do is that it's going to consolidate. And these consolidations can look a little bit different time to time. You'll see here that you may get a more sideways consolidation period. You may get one that fails down a little bit and then breaks above. Main point here is that you get a market that is currently delivering, that stops delivering and is now moving sideways and shown as itself appearing under the MAs. So you'll see you get those exact characteristics in every single point where I drew a circle here. So when the circles are forming, or when this area of consolidation is forming, we know on that higher time frame the market is currently in the state of a pause, meaning that it must come down a little bit, it must retrace before that next up move like this one here comes into place. And the main goal, so what I'm going to write down here, the main goal to get involved in the expected move as early as possible. And this goal is the exact reason why we go down to lower time frames, because the lower time frames are going to show us price action that's happening sooner, or it's going to show us price action in the form of structure that is going to allow us to identify when a market moves from a consolidation period like this here into a new profound uptrend, which carries on the higher time frame structure like this. So when we go back to talking about roofs and floors, this is that period of consolidation that is happening at these points here. So now what we're going to do is I'm actually going to go back into the chart and I'm going to remove these. Well, actually I can keep them on. I'll just make them a little bit bigger just so it doesn't get in the way of future drawings. So I'll make this one a little bit bigger and I'll make this one a little bit bigger, because what we're going to do here is we are going to draw lines that go over the area of consolidation. So if I were to draw a roof over this area of consolidation, well, I would look for points that price struggled to get over. So you see that price started rejecting a lot of areas right here on the top side of price, and then on the downside of price it started to reject a lot of places around these areas here. It doesn't, the most important part about drawing your lines is that it doesn't have to be perfect, right? It's never going to be perfect. It's to generalize a specific area where price is showing that it doesn't want to go past or it doesn't want to fall below. So the lines don't have to be perfect. So when you practice drawing them yourself, just try and get the line of best fit, right? And the line of best fit is simply the line that touches the most amount of points moving in a straight line. And what I would identify the line of best fit would be right here on the top side and somewhere around here on the downside. So what we notice here is that after price plays around in this area, rejecting price action or rejecting areas to the top side and the bottom side, eventually it'll start to push away, right? So I'm going to highlight this leg right here. You'll notice that this was the start of something new, because price, you see here, it created this higher high, and this area here was shown as just a daily uptrend, which is fine, before that period of consolidation came into play. And then once that period of consolidation sustained itself for a little bit, you see price makes a big move away, breaking past the roof of this market. And once price breaks past the roof, so it's important to write this down. Once price breaks past the roof, there is nothing stopping it until failure. And when I mean there's nothing stopping it until failure, it means that I just naturally have the expectation that once price breaks this roof, it's going to continue until it doesn't. And you see that this next area that fails is down here, right? So it's important to note that this break of the roof signals market strength, and it's showing you something previously here, it's showing you guys something here that previously price was unable to show you here, because price was going from a sideways market to now breaking past all those highs that recently were getting stuck, forming the roof. Price makes a big push out of the roof and is now in a free environment to continue upwards. And when that market does continue upwards, we expect it to keep going until it shows us it wants to fail. So just with this example here that I've shown you, you now have a very powerful concept to use when you're watching structure play out, because now you know that when you're in a higher time frame bias of an uptrend, in all the points here, in all these points, you know now that the market is going to be forming a consolidation period before it breaks up to continue these legs here, or before it breaks down into failure. And when the market breaks down against the trend of the higher time frame, well, that's just going to mean that the higher time frame is potentially failing. So let's look at the next example. So we have the expectation that this trend right here, which I'll throw a box over, is now going to continue once the roof breaks. And it does so until it fails. And now here, we now have an area. I'll remove this circle so we can see it better. And I'll maybe just move this over a little bit and dim these lines. We now have an area where price has now fell under the MAs. It's moving lower, and it's showing a point or multiple points that price rejects, which would be here, here, and here. So what do we call this? Well, we have a roof. And you'll notice something that happens here in this area that doesn't happen here in the previous area. When price breaks that roof, it actually doesn't continue into a trend like this did right away. Price actually falls back down into this consolidation range, which would be here. I'll extend that out. And then just so you guys can see the floor that doesn't get broken through, because we see what price does, the floor, drawing the floor, the line of best fit would be somewhere around here. Remember, it doesn't have to be perfect. I'm just trying to show a general area with the lines that price is rejecting on the bottom side and the top side. So price fails down back into this consolidation range, and it doesn't stay there for long, and it actually breaks past the roof once again, right here. So what do we know now when price breaks through a roof? What do we expect? We expect it to go, go, go. Sorry, I don't know why I did that with my hands. We expect it to go. It's now in a free environment where all these points that were previously getting rejected, where price kept falling down from, it's now ran those points, and it has the opportunity to make that higher time frame high, which it does right here, right? Because we were looking at this area in here, and price eventually moves from this area and makes this higher high, shown here. So now you guys are getting a deeper understanding in how a higher time frame structure plays out with its correspondent lower time frame. We are using the lower time frame to zoom in that higher time frame area to get an early viewpoint of what price is actually doing And when it does it, when it breaks past this roof, to be able to continue and play out that higher time frame structure leg. And what do we notice? Once price breaks through this roof for the second time, it goes until it possibly fails. So another thing that's important to write down, I'll write it down with you guys. Price may not continue on the first roof or floor break. Price may not continue on the first roof or floor break. As you see here, it can fail and then go on its second confirmation that it breaks through the roof. In bull markets, roofs are going to get ran through. In bear markets, if I turn this upside down and then I simply call this the floor and then the floor, and we ignore all the other text around here, you'll see that on the flip side, floors get ran in bearish markets, but you still get the same areas of sideways consolidation in those higher time frame trends. And those area of consolidations will eventually break through the floor and now become a free fall market with open space to continue before or until it doesn't, where it then enters a consolidation range, breaks out, fails to go, goes back into this consolidation range, and then continues to break through the floor once more, where then we catch a trend. So now you guys are seeing that whether it happens on the bullish side or the bearish side, it's the same concept taking place. And that's really important for you to note that the bearish market and the bullish market are the exact same. It's just flipped. Now you'll see here in this next example, something a little bit different happens. And this is important to note because the market is going to do the same things over and over again, but sometimes how it does it looks different, even though it's the same thing. So we'll notice here, once price breaks through this roof, which I can put back as roof, once price breaks through this roof and is now trending, it all of a sudden makes a dip below its previous structure points. So if we were to draw the actual trend out, it would be something like this. The trend then breaks right here and it makes a dip under the moving averages, similar to what it did here when it failed before the long consolidation period, and similar to what it did here, right here, before the long consolidation period. But you'll notice this consolidation period actually is more short term. It just dips under and then goes right away. So the way we draw this consolidation period, it's once again personal preference, and you draw the line of best fit for yourself and what makes sense for you. And the only way stuff is going to make sense for you is you're going to have to do it over and over again until you become comfortable in the consistent way that you view the market, until you can start doing the same things over and over again and with pure confidence. So what that means is that I know from my own testing and studying that I would draw my line of best fit for the roof right here, because this is the only area I see where price rejected multiple points that it struggled to get past before price actually failed the moving averages right here. So that's why my line of best fit for the roof is right there. And then if I were to draw a floor, it would be something like this, just because again, these are the points where I see price failed to really get below before it ended up breaking, making that big push past the roof. And you'll see here, I actually don't have replay mode played out because this is actually priced today. Oh shoot, so this is actually today's price. So what we can expect now, maybe in the next couple months on this asset TSM, is that it's going to continue this trend here, because we know every time price broke past the roof in the prior higher time frame structures, it showed continuation. And in markets, once price breaks past that roof, so once price breaks, let me minimize this, because now I'm going to show you the example on the higher time frame. Once price breaks through this roof, which I would draw right here. So we were just looking at all these points in here. Now we're looking at a consolidation period that happened on this market before this trend actually started. So we know that this consolidation period probably happened in the state of even a higher time frames structure point, which you see right here. It happened somewhere around here inside this area. So the weekly, it goes through a breakdown. I see it got rejected here once, fell down. It made a little pause right here before fully breaking past the roof. And what do we know once price breaks past the roof? Well, it's now in a free environment to continue and make that higher time frame structure point. And we expect it to continue until failure, because we know eventually price is going to fail and then consolidate, and it's going to have the opportunity now once again to act as a pullback on a higher time frame, which would look something like this, and price eventually is going to choose if it wants to play out this bias, if it wants to break past this roof or break under this floor. So roof, floor, it's either going to continue or it's going to fail down. And when price fails down, then we know that the higher time frame has now potentially entered an area of consolidation where price is going to move sideways. So let me get rid of a lot of this. If price on my 2-month time frame were to do something like this, delete that, delete that, delete that, delete that. If price on my 2-month time frame did this, created a pullback, higher low somewhere around here, and then did this, then I know on my weekly time frame, when price came down into this consolidation, it actually broke through the floor rather than the roof. And I know it broke through the floor because, one, it would have broken the line of best fit down here. And secondly, that higher time frame structure point would have now made a move down, failing making a higher high. It would have actually made a lower low and would have then entered into an area of consolidation. So near the end of this, we kind of got into a little bit more advanced, where you really play the same concept down the time frames or up the time frames, because all this is happening on this, like, every single time frame. And if you don't believe me, let me get rid of this. What's this? Consolidation. Okay. Breaks the roof, R for roof, goes. Okay. What's this? Consolidation. Okay. Breaks the roof, goes. Okay, let's look inside this trend like we just did. Oh, what's this? Consolidation. Breaks the roof, goes. Okay, let's look inside of this. Oh, what's this? Consolidation. breaks the roof, goes. Oh, what's this? What's this in here? What's this in here? Oh, consolidation. Consolidation. See, it doesn't matter how you draw the lines. It's about what you see. Breaks the roof, R for roof, goes. So it's the same thing happening down the cycle of fractals. Because the way trends continue, if you have a structure point like this, consolidation is happening here. And I'll use a different color now to show this inner structure. Once price breaks out of that consolidation, you now have a trend, and inside that lower time frame trend in this area here, you'll have a consolidation. And that consolidation will then break into a trend. And then inside this point here, it's getting too small now, so I'll draw it somewhere else. You'll have a consolidation and then a breakout. And then it keeps repeating itself. Roofs and floors, roofs and floors. When price breaks through the roof, you're bullish. When price breaks through the floor, you're bearish. 26 minutes in. If you guys have learned anything from this video, you got any value, this helped you understand something in your own trading a little bit more, or you thought this concept was good enough to even try out yourself, I promise you, you try it, you implement it, rewatch the video, get a little bit more familiar with it, go back to your own charts, implement it. You're going to see this concept work over and over again. And once you see it, you're not going to be able to unsee it. And when you start applying it, you're going to realize that your ability to catch a trends just got so much better because you are now using a multi-time frame perspective and looking at what that lower time frame is doing before the higher time frame, or as the higher time frame is forming, to carry out the story that the higher time frame is telling you. So we're going down the lens of time frames to look at consolidations, and whatever way those consolidations break up out of, whether it's through the roof or down through the floor, it's going to set the precedent for how that trend is either going to continue on the higher time frame or fail on the lower time frame. Like, subscribe, I'll catch you in the next one.